What's up? How you doing today? My name is Ryan Meeks with Escape to Arizona, and on this channel, we feature videos like this, market updates, 55 plus community and model tours and luxury home tours, as well as some neighborhood tours here in the great state of Arizona. If you find that appeals to you, I think maybe you should just, consider subscribing. And I'm back today with another market update. Now, last week we had a few economic indicators come out, and even the chairman of the Federal Reserve spoke on Friday. If you missed it, he indicated that we are still going to, quote, use our tools to attack inflation, which is still, as everyone probably knows, sitting at 40-year highs, which is well above their target range. And with using their tools, he did indicate another large interest rate hike will be on the horizon soon. And of course, when the stock market hears things like that, it goes into a free fall, with the Dow Jones falling 1,000 points on Friday. Additionally, the S&P and NASDAQ both fell about 3% on the day. And so far this year, in terms of Fed funds rate hikes, we've seen 4 hikes. We've seen one that's 25 basis points, 50 basis points, and 2 separate 75 basis point hikes. And just so you guys know, basis points just means percentages. So 25 basis points is going to be 1/4%, or 25 1/100%. Now keep in mind, these rate hikes can actually be good for mortgage rates if they're perceived to curb inflation. So the Fed will be closely watching economic reports, which are coming out here in September, which will weigh into their decision regarding the actual size of this yet forthcoming rate hike. Now, according to preliminary estimates, we're seeing that they're calling for about a 50 basis point increase, which would be 0.5%. But we are seeing things like oil heading back above $90 per barrel, and this is one of the main inputs in inflation. So it wouldn't be surprising to see that number be even higher, maybe a 75 point basis hike once again, but we'll see around September 20th, 21st. Now, other economic indicators were national new home sales for July, which came in under what was forecasted at 511,000 for the month of July. This was well below 575, which was forecasted for the month of July. And August is probably going to be pretty dismal as well. However, there's more to this number than meets the eye. In case you don't know, a 6-month supply of home is considered a representation of a balanced market. And while there were 464,000 new homes available for sale at the end of July, this equates, by the way, to an 11-month supply. Only 45,000, or less than 10% of the homes, were actually completed. So less than 10% of that number are available homes ready to move in. 23% of those haven't even been started, and 67% of those are still slowly under construction. Now, when factoring in the amount of completed homes, the month supply of new homes available was actually closer to only 1 month, not 11 months, which is considered well below a balanced market. Now, on a related note, data that released this month from the National Association of Realtors showed that the amount of existing homes at the end of July was also below a balanced level, with just a 3.3 months supply. So that's existing available homes below a 3.3 month supply. And while we're still, clearly seeing an active recession in housing, the low inventory that we have is still going to be supportive of these current home prices that we do have. News about new builds here in Arizona. Builders will be more likely to be proceeding very slowly with new builds. And we saw that in July in Maricopa and Pinal County. Builders counted only 1,960 single family permits, which is the lowest we've seen. I don't know if you keep track of single family permits every month of what happens with new builds. Probably don't, but the lowest we've seen was actually back in May of 2020, when COVID was first affecting businesses. And so this is less than even last July. Last July, we were going a little bit more gangbusters, but it's 35% less than last July. Conversely, the build-to-rent market, build-to-rent, still going strong. This July, year-to-date total on build-to-rent units, 11,186, which smashes the 2020 record of 9,008 at this time. I mean, developers in Phoenix specifically believe that people will be looking to rent in denser urban areas in the future. And you can see those going up everywhere. I say it in every video. Now let's talk about jobless claims. Very important, jobless claims. The number of people filing for unemployment benefits for the first time fell by 2,000 in the latest week, as there were 243 initial jobless claims reported. The previous week's initial jobless claims were also revised lower by 5,000. Now, continuing claims, which measures people who continue to receive benefits after their initial claim is filed, decreased 19,000 to 1.415 million, in case you're looking for those numbers. Now, the 4-week average of initial jobless claims remained steady in recent weeks after hitting highs not seen since late last year. And this report could be the canary in the coal mine to show the job market is starting to soften. But keep in mind, this is a lagging indicator. And given the announcements of significant layoffs from several public companies, it remains crucial to monitor whether claims increase in the weeks ahead. And that's what the Fed will be watching too. Talking about GDP, the second estimate of the second quarter GDP also came in revised down 0.6%, revised from down 0.9%. So that actually came up a little bit. And we're still waiting for the National Bureau of Economic Research to officially tell us whether or not we're in a recession. I'm not sure. It seems like everybody's not sure. We're waiting on them. And they may wait to see what happens with unemployment here to see if we get an increase in unemployment. And, that leads us into what we're looking for this week in economic indicator land. Well, this week is going to be about jobs. The jobs report will be delivered Friday along with the unemployment rate. Now let's talk about sellers and buyers here in Arizona. Sellers need to be realistic in this market. It's not what we've seen before. We're seeing listing success rate fall to 70.4%, which is the lowest we've seen for late August since 2010. In March of this year, it was 92%. So 8% were failing. Right now, 30% of listings are failing. And remember, these are listings that are canceled or expired. So when you list your home, it's very crucial. Price it right, create that appeal to your buyer that this could be their home. Take out the bad smells, paint, curb appeal, all that fun stuff to sell your home. Now, this isn't a bad thing. It's normal and just not crazy. It's not a frenzy like it was the past year or two. And for buyers, one thing to keep in mind is the flow of new listings. And this is sort of what I'm thinking about. Now, between April and July, we saw quite a bit more inventory come onto the market. This flow has eased over the last few weeks. Just to give you some numbers here, the record was 3,169 new homes per week, which we saw at the end of June. And now this came down to 2,700 per week in July. And now we're below normal, because that's about a normal level, 2,700 per week. Now we're at 2,224 per week. So we could actually start to see this number decrease, and we could see the active listing number decrease if we get any type of increase in demand. Now, this isn't happening yet, but we're seeing a small drop in active listings comparing today with a week ago. And that's what I'm always looking at. What happened last week? Where are those active listings going? And I look at this number particularly. And one thing we almost forgot to go over are the Cromford Market Index numbers. You can see that some of the luxury markets up there, Paradise Valley, Scottsdale, Fountain Hills, Cave Creek, still in a seller's market, especially Paradise Valley. And going into a balanced market is Phoenix, Goodyear, Mesa, Glendale, Avondale, Peoria. And buyers markets, yep, those are a lot of markets with new builds in them, such as Buckeye, Queen Creek, Maricopa. Gilbert's got a little bit of new builds, not too many. Surprise does have a lot. Chandler, here and there. Tempe, not so much. But yeah, those last 5 or 6 right there do have a lot of new builds going into those markets. So definitely a buyer's market. And remember, with the Cromford Market Index, between 90 and 110 is a balanced market. Under 90 is a buyer's market. Above 110, a seller's market. And it won't be surprising to see parts of central Phoenix metro area almost turn toward a slight seller market, while the outer sections such as Surprise, Santan Valley, Queen Creek, Buckeye, where there's a lot of new builds, sort of stay in that buyer's market because there's new build inventory coming in, as well as the resale market. Now, the big thing I think to watch out for is where interest rates are headed. And I don't have a crystal ball for that, but I do have a magic 8 ball here, and I can ask the magic 8 ball. Are rates going up? Mortgage rates? It says yes. Uh-oh. Magic 8 ball. We'll have to see what happens there. According to Freddie Mac, one thing to keep in mind is for every 1% increase in the mortgage rates, home prices go down 4%. And JP Morgan has a little bit of a higher estimate for that. So for every 1% mortgage rates go up, prices come down at 6%. So we'll have to see what the end of September brings us. And we'll see you on the next update video.